All signs in the sky and on Earth tells us that market bulls has been officially unleashed. That very strong price action signals has been noticed either on regulated or unregulated markets. But can this strong momentum persist? For now, we need to stop reassessing that Fed might be obliged to hike interest rate point by 0.5. For now, the market is living for this 0.25 that will be brought to the market next week, and that's what we see on the markets. But have all of the market bulls has run away and there is no chance to catch them up? We'll find out today by looking into the most important charts, and we'll try to find out where this opportunity may sit. So welcome to another episode of Blockrevision. Let's head on to an intro. All right, and as always, let's start off with an economy view. So for now, let's discuss a little bit, as today's episode will be focused on the analytics of a managed stock charts. We'll head on to this analytics side in a second. At first, let's find out what has happened yesterday, and definitely the most important event was this ECB's Christine Lagarde's speech that where she has calmed down market voices that the ECB is literally prompt to hike interest rates by 0.5%. She claims that this banking sector is much stronger than it was back in 2008. So I would say right here that yes, in some terms we have made our homework, but still we are in an environment where those interest rate hikes going to be delivered. So before that very restrictive policy will fade away, we cannot say that all headwinds has been literally faded. So for now, yes, the market has been calmed down, as I spoken, but we need to reassess that there are some other elements that bother the market to a large extent. In a not maybe short term, as in a short term we have been in a thrilled modes, but in a medium term there are some things to watch out. Let's head on to target rate probabilities after this meeting, and right now the market is assessing that when the ECB hasn't made anything about their potential pivot of their hiking trajectory, Fed will do nothing as well in that case. So this recent demise of SVB was too few to say we need to make a very fierce intervention. So right now they are keeping their road very strictly, and the target rate probabilities for now is with 78.2% of probability that it will be hiked by 0.25 at the next meeting, and we still have 5 days left. So we'll find out what will be the this most important event of the month in 5 days, and we'll get you updated on this. So if you haven't subscribed to the channel, you may consider this right now. So in order to wait for another knowledge bombs I'm about to deliver. All right, so what about the market sentiment? We can find that fear and greed index showing that we are still in a extreme fear scenario. So it means that we have just rebounded on a short-term basis, but the sentiment right now is still pushing us and dragging us to the south. So market momentum has increased, but still on a S&P 500 we are trying to build up another like a forward leg up that would need a bit more volume, upside volume to come in. So before it happens, we need to struggle a bit within this latest price zone, and we'll get you updated on what will be the next possible path of the least resistance in a second. So that was about it, but we still are expecting, at least by conference board research, that US will be heading throughout a recession in a second and third quarter, with a possible rebound somewhere in between third and fourth quarter. So this table is showing us that we cannot put everything out of our pockets and possibly wait for this bit more lean months. So for now, I would say that yes, the conference board has many analysts that are about to deliver very credible source of outlook on the economy. That's why I wouldn't neglect them. But also remember that the bulls are climbing a wall of worry. So when it happens, it means that it's better when the market is expecting something that may bring a spot of bother. Then when this expectations doesn't come out to be true, the market is surprising to the upside. So surprising with momentum to the upside. So for this time, I wouldn't neglect this at one side, but we need to remember that this inflation threat still hasn't been extinguished, and we need to bear in mind that inflation gauges haven't really dropped to this desirable levels without a bumps along the way. All right, so that's about the possible fears of a recession. In terms of real GDP growth year over year in percentage terms, right here you can find emerging developing economies are expected to thrive this year. The global one might be lagging, but mature economies are those that are the highest laggards. But I wouldn't really stick around to this, as we do know that during the headwinds we may see that mature economies are thriving a bit more significantly than emerging countries, emerging economies. But if we do expect, so it's very optimistic one, if we do expect that won't be recession and that everything should be fine, we may see eventually that these economies may possibly perform pretty well. But for the time being, it's hard to assess that scenario. But conference board finds it right as it's depicted. All right, so let's find out what's next, and that's about market outlook. And for the market outlook, we are right now heading to most important charts, and well, let's start over with DXY. So DXY is this dollar index that's right now trying to build up this inverted head and shoulders. If we manage to form something like that cap, or rather handle of a cap, if we assume that this formation is a potential cap, we may see a possible price rebound to levels of even 100 or 110 that comes out of this breakout that may come after this inverted head and shoulders been formed. So inverted head and shoulders is one of the most important pattern in terms of credibility on a stock market. So I wouldn't deny its performance, as it's over in over 2/3 of circumstances those objectives work out. Those objectives of a distance between a head to a neckline that are shifted to the point of a breakout does work out. So it means that if we manage to get out of this pattern at the end of March, we would see much more stronger and much more stronger price action with acceleration in April. But for now, we still are fighting within this area, and I do find that, especially after recent price action of many assets, many risk-on assets, I won't expect DXY to eventually hit this boundary, but we will see. So for now, DXY is potentially bullish in a short term, but in a medium term, I would expect this type of trajectory, but with the possibility of getting right above this neckline and right after rally upwards. So back, keeping in mind that that will be a decisive time for US dollar, possibly somewhere on the verge of March and April. This answer to this question, where we might be going upon second quarter, will eventually arrive. So that was about US dollar index. Sorry if I haven't scaled out. All right, so right now you might see this much more clearly. So in terms of SPX, it's getting a bit blurry, so I removed that draw lines. Recent price action is the one. Recent price action at the reversal, potential reversal, especially when hitting this congestion zone, is pointing that we might be on the SPX on the verge of something huge coming in. So we need to close above this recent weekly bearish candle. So when we manage to get across 40.80, we'll possibly head on to a new medium-term highs of around 43 hundreds. That was a top of August. So it's very interesting to watch this type of price action. But if you ask me, that's right now a good time to enter the market, but at first maybe await for a little pullback within this area. So potential price action should be determined by some kind of that moves. But we needed first to get out of this market trough, and right after, when we managed to get above this bearish momentum candle, will potentially form a higher lows from there. So that's about SPX right now. Let's find out what about the WTI USD. So in terms of this one, right here, I've just drawn a potential area of interest for WTI USD. So for me, we are right exactly at the area where my potential buy area has been found, and especially after getting, I would say, catching this liquidity below this previous lows, I would expect that WTI is right now going up from here, especially when looking at this daily horizon. We formed a double top formation that may send us to the vicinity of 71 bucks at least. So I would switch WTI USD to an section of trade idea, as it's, in my view, very interesting chart right now. All right, so we can find that this one more cent about WTI. Now we can go to the point where this loss of pain can't be endured by many of those that were buying at a breakout, that have been buying WTI at a breakout, and they have been literally smashed by over 3% of drop. So this candle is the one that might be a reversal for this current tendency, but we'll talk about it in a second as well. So very interesting as well is this natural gas. So I will find out where is the natural gas. Natural gas, yes, CFDs. Oh, it's going to be very nice right here. So recently we have formed a double bottom right at this. Sorry, I haven't meant to turn on this. So we have formed a double bottom that has been remarked by those two candles. Right now we might see a confirmation of this bottom. So we may form out a triple bottom that are not very often met formation on the market, but when we find a rebound, very, I would say, undoubtful rebound out of this area, we would find a possibility to build out another very important move upwards. So we are already have been started to rebounding out of this 0.61.8 Fibonacci extension level. That's very important for bulls to remain at their positions. So natural gas, in my view, is also under the bullish mode in order to maintain my point of view. This rebound from this area should be validated during, at best, this trading session. In terms of gold, as the one of the last been delivered right here, we can find that we are very strongly going to hit this recent highs of 19.5 hundreds, and that's where I would expect that some of the profit takers should come out. But observing this recent price action, we may expect even a further continuation, but in a medium term, in a form of a type of I would say cup and handle formation. So after reaching a top, we would see a possibly similar to this price action, and after reaching and completing this trajectory, we may see another rally, even to the all-time highs. If we just drawn out an extension of this formation, so we may even improve. Let's see, improve this recent highs of 20.062, and it will be a possible another sign of a bulls on the gold market coming in, and that may influence another wave of street speculators, if I may say so. All right, so that's I would say roughly bullish outlook for many of assets, but as a reminder, we cannot be that thrilled as recession fears haven't gone away, and right after this interest rate hike period may end up, we may see another problems that may come out of this, that every time when after a very strong interest rates a period, we started to cut those interest rates that almost always have coincided with a much bigger turbulence for the economy. So this time may not be